I'm happy to bring in Christopher Peel, the Chief Investment Officer from Tavistock Investments. And Christopher, just from a market's perspective, how important is today's informal summit in Salzburg versus the more formal summit that's coming up in November for the trajectory of interest rates and also the currency?
Well, I think it's just another stepping stone to the end game, and the end game will be the UK will leave the European Union in March next year. I think that there will be a trade deal, primarily because Europe needs it more than the UK. When the UK has a trade deficit with Europe, I think they're in the negotiating seat. They've got more of the bargaining chips, especially in light of the fact that with the Trump trade tariffs, German manufacturers, French manufacturers are very concerned about losing access to the US, and then to coincidentally at the same time lose access to the UK. It's a big problem for them.
One of the reasons we're getting closer to a deal is because the UK are gaining an increasing amount of leverage. Do you think any of that has to do with the fact that they're really going hard on this concept of, look, if you don't give us a deal, we're happy to go and pursue a no-deal Brexit, and we're prepared for that?
I think Macron and Merkel were told by the large manufacturing businesses in those countries that they told Barnier, you must get a deal done with the UK. You know, okay, you've been negotiating, but the reality of it is, we need a deal with the UK to protect our export markets.
So I don't disagree with you on that, but then ultimately, even if they do come up with a deal in November, at the end of the day, Mrs. May has to take it back to Parliament and Parliament have to vote on it. What we know right now, given the current configuration and various leanings of people in Parliament, at this point in time, if she goes back with a photocopy of the Chequers plan, which we know on all sides, even European sides, there are reservations at this point, it would be shut down. So the question is not whether you give her a deal to work with, but whether or not that deal that she brings back to the UK Parliament is something that everyone else can work with. And I guess from a market's perspective, my question is whether or not the market is adequately pricing in the prospect of Parliament shooting down whatever deal she comes back with in November.
It's hard to tell. I think there's been a lot of uncertainty. You're looking at how sterling's traded over the last couple of years. We maybe reached a low in the low 120s. We fell from 150 at 132. I think the gap risk on a trade deal, no deal, is that the danger is sterling reverts back to the longer term moving averages. So I think a lot of negativity is priced into sterling. I think the UK equity markets are fairly priced given the level of what's going to happen post March of next year.
And so in terms of your positioning, are you playing for the potential of a move down in sterling at this point in time, or just staying out of it because at this point the outcome is a little bit binary?
At the moment, I'm running a full currency hedge back to sterling for my UK funds, primarily because it's hard to model what exactly will happen. But you know, there's a magical figure of 120 that is talked about in the press on a no deal. It may trade down there, but there's an awful lot of speculative shorts in sterling. I think the risk is to the upside, not the downside, because you know, if there's no deal, then we know there's no deal, so that uncertainty goes away.
That's one way to think about it. What about equities? Because UK stocks have not really enjoyed much of the rally we saw, obviously, in the US and not so much in Europe this year. But generally speaking, UK stocks are undervalued here. There are many potentially cheap opportunities that have not really been realized because people are too afraid to step into the market. How are you thinking about owning UK shares at this point in time?
I don't have a strong view in so much as against benchmark. We're neutral. I'm neither long, I'm neither short. I think the next play will be from the long side when we get more certainty as to what exactly the trade deal will look like.
All right, Christopher, stay with me. We'll chat more about that shortly. Christopher Peel, Chief Investment Officer from Tavistock Investments.